Welcome back to Mortgages Made Easy. I'm your host, David Jackson. Today, I'm joined by Hugh Jones, CEO of Phinom, high net worth bridging lender, international bridging lender, I'll add. Hugh, welcome. Someone I'm really excited to have today, someone I've known for a long time in the industry, great, and a journey I've watched from the sidelines. So, do you want to just give us a quick overview as to how you got into this wonderful world of financial services?
So, as you know, or you know some of, I was at Alexander Hall back in the day, which is part of the sort of wider Foxtons group back in the kind of John Hunt days, things we call them. So 2003 to 2007, market was going crazy in London. We all thought we were geniuses.
Yeah, you still do.
Still do, yeah. Earning far more money than we should have done, for what we were doing. And I just sort of saw a niche in that high net worth space. So even back then when the market was going mad pre-credit crunch, we were doing a lot of loans, but we were doing them for, Mr. and Mrs. Smith, and people who could bring 3 months pay slips or 3 years accounts or more conventional sort of proof of income, should we say. And the market started to change in the UK, that sort of London was becoming cool. People were starting to come in. Russians were buying into the London market, Middle Eastern clients, Africans, any nationality wanted to have a boat hole in London, and these people weren't being serviced. I then sort of obviously set up my first business then, and kind of have run always in that same niche of that kind of high net worth international space.
Okay, so if I think back then, I remember you moving on, and we'll come on to that at the time, the actual time of when you moved. But if I remember rightly, you actually approached the business or the head of the business and actually said this is the opportunity, and they didn't run with your suggestion. Is that right?
Yeah, a little bit. I think at the time, as we now know, that John Hunt sold to, was it CVC? Was it
PC Partners?
Was it PC? Okay, so. I think all businesses, when they get to that size, are trying to aggregate and build on size, and I guess what we were looking at was quite niche. So it might be a little grand to say, that we came with this big business proposal and it was rejected, but it was a long ways line. So I think we very much wanted to take the business in a more sort of niche route, or at least have a sort of a department within the company that worked like that. And they were doing fantastically well and were incredibly good at what they were doing, and wanted to stick to their knitting. So we kind of went and set it up ourselves.
So why do you think they couldn't cope with it at the time? What was different, do you think, from hindsight, from having then made the move?
I think sort of having run reasonable sized businesses since that, there's a great saying which I like, which says, you can do everything, you can do anything, but you can't do everything. So it's that thing of, that ultimately it is down to time, it is down to focus. And probably what I wanted to do and what I wanted to focus on wasn't what the business wanted to focus on. At the time, business was making millions and millions and millions. So they would have been an absolute idiot to listen to me and not focus on what they were doing. So I think, that thing of sort of two things can be right or correct at the same time. That was it a good opportunity in a good niche? Yes. Were they correct to stick to what they were doing? Undoubtedly, they wildly successful. So that kind of gave me the spark that I wanted to go and work for myself. My dad had always said that you don't get rich working for anyone else. And so I'd approached the mortgage industry quite sort of in a calculating manner, that I saw it as an industry where there were fairly low barriers to entry if you wanted to work for yourself. That you didn't need huge capital investment even back then, although it was pre-Wi-Fi and 5G, and you really just needed a computer and a phone and a sort of bit of ambition. So it was always really in the back of my mind that I wanted to work for myself. And whilst I loved the time we had there, and it was great fun. It was real, I don't say glory days. I mean, it wasn't quite that incredible, but it was. We were in the right time at the right place with the right people, and that set the foundations for the rest of my career and kind of how I view business since.
And we were obviously a bit younger and a bit more sort of
I had more hair, more and all that stuff. Yeah, exactly.
So at the time, then, so how long did it take you to actually sort of get the courage to actually make the move, do you think? How long did it?
So I think it was pretty swift when we did it, because we had sort of always sort of been in the back of my head, and I never, in the same way that whenever I've kind of worked for myself or set up businesses from scratch, it never enters my head that it's not going to be a huge success. So there's huge roads of chaos and death and destruction along the way of running a business. But generally, as long as you have that kind of unerring confidence in what you're doing is correct, and if you keep working in the correct fashion, then I'd no doubt that it was going to be successful. Like, I just knew, in the same way that I know what I'm doing now will ultimately be there. It's quite interesting that when I run businesses since and people have left, most of the time they make up some ridiculous excuse of where they're going. They say they're going traveling in Australia for 6 months and then pop up somewhere else, 2 weeks later. But sometimes, you have a good enough relationship with someone that they will come and just be straight with you and say, look, I'm leaving to set up my own thing. And when that conversation, or if that conversation develops and people say, do you have any advice? I usually say to them that the big thing that you don't think about when you set up a business is actually how it runs operationally. If you're really good at your job, and we're in sales ultimately, then you'll still be really good at your job and you'll still sell lots of stuff then. If you're crap at it, then you're going to struggle. So people focus very much on that front end. I'm not going to have enough business, I'm not going to earn enough money, am I going to have enough clients? The reality is you will, because people buy you and not the business. They might buy into the business on day one, but once they start working for you, the relationship they have is with you. So I say, put out your mind business and how much you're going to have. You're never going to have enough. You're going to want more than you actually have. But think operationally. People don't work with Alexander Hall, or they work with Alexander Hall because if they want to pop in tomorrow and sign a document, the printer works and the document prints. And if they need something amended quickly, then they have a legal team or a compliance team or a marketing team that can amend that quickly. People won't forgive operationally it not being correct. So you just need to make sure, focus 95% on that operational piece and making sure that's perfect. The website reads correctly. There aren't spelling mistakes. It has the right idea. If anything needs to be compliant, it is compliant. And the kind of business bit takes care of itself. And so back then I was kind of just quite gung-ho of like, we'll just pile in and it'll be fine. And it's actually that you learn afterwards that all that stuff had just got taken care of by people behind the scenes. Is
you
just
stuff, sort of plug in, don't you?
Yeah.
I mean, I remember when I first set up on my own, I went from running a team on Park Lane, looking over Park Lane, Ferraris going by, to the next, I'm in my spare bedroom and the printer's not working.
Correct.
And there's no one there to 1370 is what we used to dial. It's like printer's still not working.
Why it's not fixing my printer?
And that's the thing, isn't it? And that's where you learn, isn't it? So, but I think also the cream rises to the top, which you're a great example of doing. You've got the sales side of it. You just have to learn the rest of it as you make the move. So again, if I think about the timing of making the move, you couldn't have timed that perfectly.
It's horrific.
August 2007.
I always say, with that a lot of my clients now are people that sold their businesses when I was first setting up. They were the smart ones that were getting out. So it was 7th of August 2007. I think if you Google started a credit crunch, I think it's the 14th of August 2007, which maybe is around Northern Rock, which was the first sort of crack in the UK. Look, it was pretty disastrous. But I always try and positively spin everything that actually it wasn't quite as bad for us because we had such low overheads when we started. Whereas actually at Alexander Hall when we were there, we were doing volume to earn, although we were earning good money, to earn our money we were doing a huge amount of volume. So actually, first 2 or 3 years, like we were just so ignorant and unaware of what was going on around us that kind of, as long as we grabbed in 2 or 3 grand a month to kind of keep the sort of lights on, then that was okay. I look back on it now and it was probably very fortuitous, that we were so young. I was 26 and no children.
Adaptable.
We could kind of just fly by the seats of our pants a bit.
Yeah, but do you think, so August 2007, it took another full year for it to really bite, and then the recovery
it was a car crash in slow motion. Yeah, that was our first year. Yeah,
always think it's going to correct, and then it wouldn't. But it's fun times. But I always think if you could get through that, it makes you stronger, doesn't it? So if you think back to then the basics, you've moved on. What was your setup for that first year? Were you working out of each other's bedrooms, or
no? I had a serviced office. I would say like the wrong end of Battersea Park Roads. Had that. We had the most ridiculous printer you ever found in your life, which took up about half the office. Didn't work half time, and just some laptops and some phones and what we're letting dongles. You remember the dongles sticking the old laptop so we could work at the pub. Yeah, it's kind of the most important things in our life.
Rather than switch on your electricity.
Exactly. Yeah.
Oh wow, that's great. Yeah. So again, so if you think about that journey from knowing where you ended up with Enness and what have you, so you've left Alexander Hall. There's you guys, obviously working in a small office or what have you. How long did it then take to then start seeing the shoots of a proper business and actually start, feeling like you're building something that's going to go? I appreciate you probably did at the outset, but when did you start?
Yeah, I think, as I mentioned to you just beforehand when we were speaking, I think businesses have very much stages or cycles or however you want to say it. That I think you can build a business out to probably 12 people, give or take a couple of people, just from blood, sweat and tears. And as a entrepreneur, with enough oversight, for enough charisma, for enough energy, you can generally manage that team. If things go wrong, you can pull it back in. Culture, you can dictate a lot from how you act. And then I think there's another reset then to get to about 30 people. And so I found that kind of we waver between that kind of 0 and 10, 0 and 12 people a lot. Yeah. And it wasn't until we properly broke down everything we had, like literally pulled it to pieces, that then you could start building a business which can get to about 30 people, which generally means different teams. So rather than a marketing person, a compliance person, an operations person, you have a marketing team, you have a compliance team, you have administrators instead of one or two, teams that need to operate independently, because you can't be in that marketing function all day, every day, because the size of what they do has grown to a certain size. And then, I found that we sort of pulled the walls down again at 30 to build to 100, that you sort of have to actually then start accepting that you are losing control of the business. And certainly when we initially grew, had a sort of growth spurt, we got to just under 60 people. You're dealing with, we had an office which was about 4,000 square foot floor. There are different sections to the floor, so everyone's not sitting together, which makes a big difference. Cliques grow within certain teams, cultures grow within teams rather than the business as a whole. You're not necessarily speaking to everybody that you hire. So there are people that start at the company who you haven't actually even spoken to or you don't know. That sometimes is good, sometimes terrible. And so I'll be honest, I didn't particularly enjoy that kind of initial period when we really grew out to bigger number, that maybe your ego is at the biggest it's ever going to be, but you're probably completely out of control. And also, the biggest thing for any business is cash flow. They say, it's not about how much money you make, it's about how much money you keep. I think when we initially grew, we were running at a run rate of about 400 grand a month we were spending when we had sort of grown out initially. And as you know, sales is variable. So we were sort of generally making 300 to 500 a month. That was kind of how it went. So things can be a bit hairy, and you have to, saying, build it and they will come. You have to actually build the teams and then let revenue follow. So there are periods where, you're running a business which seemingly from the outside is doing very well, and you're absolutely on your arse cash wise. And that was a sort of recurring theme for quite a while actually with our business. And it wasn't really until we started focusing very much on what we did well on our niche that we were sort of getting distracted with people allowing us to pull. And ourselves, it's not someone else's fault, it's our own fault for following those roads. Where people, a bit like how we started on saying about someone I approached at Alexander Hall, said, hey, why don't we do this high net worth space? And you find, but before you know it, that the business is like a octopus or with like sort of 10 or 12 different legs going in different directions. And so it's really important that you just focus on what you're good at. And so it probably wasn't until a good decade in that I thought, we know what we're doing, we're earning good money, I'm in control here. So I'd say kind of 6 or 7 years of being a lifestyle business, 3 years of being woefully inadequate entrepreneurs, and then probably we had, and then it all came together pretty quickly, if I'm honest.
I remember John Hunt saying that to me. It's like, how long did did you see Foxtons go? It's like, it took me 10 years, and then I want to take on the world, and I'm going to pull myself back in. I want to take on the world again. So it's quite very similar. So just coming back to going through the phases then, from being okay, boutique style to then get it to 30 people? How did you actually go about breaking it down? Did you bring in anyone external, or was it sit down one day? And
so I think the way we viewed it is when we started bringing staff on board, and it's very true for any business, not necessarily what we do with sales, that you're worried when you grow that the people that you hire are going to be not seen as industry standard. So because you start to want to compete with your peers or companies that you admire or you aspire to. So the natural first step is you bring in people from outside that you pay far too much money to, or in our case, you offer far too much commission to, because you understand that now I can't do everything. Yeah. So that everyone that comes through the front door isn't going to speak to me. But if they don't speak to me, I want them to speak to somebody really strong. So the business is still seen as, and you can outmaneuver large companies in that way. The smaller kind of more agile companies could do it because every person you speak to is relatively senior, and some of the guys that came and worked for Enness, we're top of the industry people. But the problem is you don't make any money doing that. You end up you buy revenue. You end up sort of paying people far too much money to make anything. So the way we did it, and look, I mean, I probably would have done things a little differently if I had a sort of another time around, is we just had a massive colour people that we were paying too much money to. I mean, there's literally blood on the walls, for a couple of days in terms of just getting rid of people. And we replaced those people with grads, second jobbers, people who'd been in the industry for a year or two, who we were paying half of the amount to. But then we had to make sure to do that, you have to have structures and policies and procedures in place. So you have to actually spend money behind the scenes and go from people coming to deal with Dave at Enness to they come to deal with Enness, and it happens to be whoever deals with it. And so you completely reset. I mean, you have a complete punch in the face revenue wise. The quality of staff you have drops. It doesn't mean they're not good, nice, intelligent people. It just means their experience levels goes from people who've been in the industry 5, 10, 15, 20 years to like 12 months. And that's really difficult because you then start from the outside of the industry having people snipe at you, say, they're full of kids, they don't know what they're doing, which is really frustrating because I do, but they don't. Like, it's true. Like, so maybe there's a better way of doing it, and I'm sure. But for me, it was just you literally had to tear the walls down and start again.
So you mentioned a moment ago that you'd have probably done it differently. So obviously, with the passing of time, was there anything that you actually think you would have done differently, or would you have actually done the same?
I'd done the same thing. I was just being polite. I probably would have done it a lot earlier and a lot more brutally. It's the truth. Yeah, if I'm being honest.
It's easier said than done, though, isn't it?
Correct,
especially when you are dealing with people. So that's fine. Yeah. And then I guess going from the 30 section to that sort of mammoth where you don't know who you've actually just employed and you've taken people on, what took you to that stage? Similar sort of process, or is that different?
Ego.
And
I think when you don't really know what you're doing with a business, you just think more people is better.
Yeah.
So you just naturally... You think people view success as growth, as numbers of people.
Yeah.
And it's not in the slightest. Like, it really isn't. It's all bottom line. Yeah. It's all profitability. So now, I'm my third business, having done fairly well in the first two, I'd want to keep this business small as possible. I want as few people as possible. I want to make as much money as possible.
Yeah.
And in time, look, if we need teams for this and teams for that, then I can bring that on board. But it's funny, I don't have that. I mean, I've a bigger ego probably than I ever had now, but I don't have that need to show off to the rest of the world that, like, kind of Hugh's doing amazingly well. I just want that bottom line to be as healthy as possible. And when I've come to sell businesses, people have this misconception that people want this huge growth story of, like, if you're 100 people, like, you're far more attractive to someone to buy. Maybe that's the case in certain sectors, maybe like tech, or in... probably I would assume manufacturing, because you can probably, if you get acquired, people can bring your cost of production down. But when it comes to financial services, the only thing I found is when we're growing, like, no one was interested, and when we were making money, we had people approach us, and I've never been able to figure out how to grow and make money at the same time. Now, I'm sure there's a way of doing it, but you have to reinvest what you're making back into the business. So by nature, okay, EBITDA is a great number because you can adjust it and you can play with it as much as you like. But the reality is people would want to see what is that cash on cash rather than EBITDA.
So I guess it's obviously going from the boutique, and actually then if you're going to get to these next stages, you just got to...
You've got to accept that there's going to be there's a 2 or 3 year period whereby actually you're just growing.
Okay.
And I think that's ultimately when we sold the sort of first chunk of Enness out, that we kind of felt like we'd gone through a bit of a battle a few times, and that if we were going to go again, probably we wanted to take a few quid off a table and then do it rather than go for another cycle of this.
Another 7-year cycle to
correct
the next window of opportunity. So if you think with Enness then, what were your USPs? Obviously from the outside, it looked like great branding, obviously targeting the right ways. I mean, what was the trick to it? What made it the success it did?
I mean, look, I think brand was a big thing. So the way I viewed it was that no one had really gone into that high net worth mortgage space and created like a go-to. If I'm a Middle Eastern entrepreneur, if I'm a Russian oligarch, if I'm an investment banker at Barcap, and I want to buy my house in South Kensington, and I'm not going to tick all the boxes. There's no like go-to provider as a broker. So, for insurance, you'd have Hiscox or Chubb, with a kind of, if you're rich and you want to insure a nice painting or a nice vintage car, that you go to Hiscox or Chubb. If you've got a few quid and you want to have a bank account with a nice checkbook, you go to Coutts or to Hoare & Co or all these places. And it seemed like there was kind of always, for all the sort of, in the financial world, there are always kind of touch points that you naturally knew where to go to. But when it was kind of actually broking a deal, albeit quite a niche environment, there was no one that people knew where to go to. So our vision was always to try and create that go-to. And the way we did that was through branding and through marketing. That I think there was this big idea that the high net worth space had to be, the old boys club with the secret handshakes and all the businesses done behind sort of solid oak wood doors in private members clubs. And actually the reality is the world was changing. People were starting just to use Google to find a broker. Were happy to deal with people over the phone when traditionally people would always meet face to face. So we kind of just rode that wave really, that we sort of thought, right, okay, we'll go with it. We'll create that sort of go-to brand. I don't want to in any way compare ourselves to Foxtons or what John Hunt did there, but he was sort of the pioneer of the kind of the first cafe style estate agency offices, the kind of the videography. No one was doing that before. There was a few sort of wide lens pictures to make everything look a bit bigger, whereas he was doing the videos. And so I guess probably we stole a little bit of that let's try and make sort of mortgage broking cool. I mean, that sounds horrific when I say it, and like I cringe and my toes curl. But I think you have to. It is a big investment for someone. It was and still is a difficult marketplace to navigate. Yeah. So you kind of had to draw the punters in somehow and show people that actually, look, what you're looking for, we know how to do. And how do we do that? We do that through case studies. We do it through video. We do it through marketing and branding and all these things.
Okay. So again, so the course, the skill set for your brokers as versus from the world we came from, what did they have to do differently to work for you as opposed to, your bigger names, more sort of vanilla sort of brokers?
I think we had this sort of, we had a few sort of strap lines, but it was just like, we get shit done.
Okay.
And it was very much like that Alexander Hall Foxtons mindset, wasn't it? That like you kind of work hard, play hard, but always answer the phone. That kind of thing of like, that we answer the phone. You want me to do something, you're going to have it in half an hour, an hour. If I can't do it, I give you a very set time frame of what you do. I remember John Hunt once talking about, actually being very quantitative in terms of how you speak. So you don't say, okay, I'll get that to you later. You say, I'll get that to you by 6 o'clock. And it's that kind of way of actually being able to just quantify what you do. And sometimes you're saying, look, I simply can't get that today. I'm on it. I'm aware of it. Like, it's not a problem, or it is a problem, and these are the things I'm thinking about. You'll have it tomorrow by lunchtime. I simply can't do it today. And so I always try to drill into people, don't message, don't email. I fucking hate email, right? Like, just don't. It's just terrible. Just pick up the phone, speak to people, deliver bad news quickly. That kind of way of just try and be quite dynamic in terms of how you work. And people really respond to that well, because whilst for you, maybe there's 20 deals on your desk or 20 people on your desk, for that person, it's really important. Like that they know that you sort of, it's not even about caring. Like I know it's a really harsh thing to say sometimes. Like I care as much as if this happens for you or not, because it's a reflection on how good or bad I am at my job.
Yep.
And yeah, over time, like as you know, with clients, you get to know them personally. So you want them to succeed, to do things. So that caring bit will naturally come. You can't immediately care about someone that's like literally a name on the page. But if you know that like I'm hyper professional and hyper alert, but I will deliver for you and this will happen.
Well, the best brokers are the ones that do care.
Yeah.
The ones that clock off at 5 o'clock
Correct,
and don't want to think about it. They'll just be doing their job and churn it through. Whereas the good guys, will care about how they go about it. So, so you got a good quality of brokers. So the day to day then for being a high net worth broker, what's ultimately the difference between the world we came from? What do they need to think about more and consider?
I think you go from where we were, and a lot of the brokerages that exist, they spend 95% of their time killing and 5% catching.
Right.
And I think you flip that, you put it completely in their head that 95% of your time is catching and 5% is killing.
Right.
That you're not you're not having to do 20 deals a month or whatever a big number is. I don't know what a big number is now, like a bit different when we were like Alexander.
Well, we have product transfers now.
Yeah, exactly. And so really it's about harvesting relationships, getting out there, speaking to people, increasingly doing stuff like this, where you're creating that trust or that confidence in somebody. You're not going to do 20 deals of 5, 10, 20, 30, 50 million a year. It's just never going to happen. So, but if you do one deal a month or a couple of deals a month and they're a decent size, then that's fine.
Yeah.
But you really have to be on it, and you have to make sure that these people, the kind of client who's doing a £200,000 product transfer, they're probably going to speak to you. I mean, maybe they're going to road test you against somebody else.
Yeah.
But generally, these guys who are high net worth, ultra high net worth people, they're going to have bankers chasing them. Accountants are going to know 27 different people who are going to help them out. Their mate that they work with, or so you need to almost make sure that you're that kind of central person that they go to and they trust.
Yeah.
So like I said, it's kind of 95% of your time is catching, developing relationship, putting yourself out there as an expert, understanding that field. If somebody makes reference to some kind of technical tax point, okay, you're maybe not going to be a tax expert and understand it, but you have to understand the nuance of what they're talking about. Otherwise, that kind of moment's lost, as it were.
Rather than say they're waiting for another deal to come to.
Correct,
and obviously what have you. So that's on a similar note I was going to ask. So again, when you went off into this space, you obviously then developed a more broader range of lenders to go to, private banks and what have you. How did you sort of penetrate that sort of area and get in with a few of the more quirkier options?
I think it's like relationship led, and what I found is increasingly people at the higher end weren't chasing rates so much. They just wanted certainty of deals happening. So it's kind of picking the winners with the lenders. As you know, like within private banks, quite often it's not necessarily the private bank you go to, it's the banker within that bank that can make stuff happen or is motivated to make a credit deal happen. So yes, did we have dozens of different obscure banks? Yes, but we still probably use the same dozen over and over again. And then now and again, you could go and pull from people. But it was being able to influence the decision that they came to, making sure the right valuer went out to value the property, the kind of
speak to somebody with a can-do attitude rather than the computer says no.
Correct, yeah. So that's what I found. More than necessarily finding dozens of new lenders was sort of picking just those dozen people that could deliver and would pick up the phone at 9 o'clock at night to you and would kind of pull a favour if you really needed one, and vice versa. That you would sort of do them a favour or bring them business or bring them clients.
Okay, so all that sort of world will come on to where it's all led you, but it's obviously meant that you were a little bit more bespoke, actually have a few different lenders and what have you. So, and then went into different paths, which were more quirky. What was sort of appealing to that? Was it just the difference, or always trying to find something new?
Maybe. I think the way I viewed the market was like, it's always, you've got to pick a niche and stick to it. That I think there's so many voices now saying that they everybody does everything, that I think when you're, especially from a marketing perspective, people need to understand what you are good and bad at. You'll still get all the other stuff. Like, people have this idea that if you say, look, I'm a high net worth broker, or I'm a lender in a high net worth space, that like people aren't going to approach you. They still will, because they see you as an expert in a field that they want some information from. They'll still come to you. Look, this is something you can do. Is it something you can help with? Is it too small? Is it too big? And so a little bit of that kind of picking a niche is just giving yourselves like a marketing angle that that you can kind of focus on and that you can go into. Because you can always say to people, look, I can still do that. I mean, we still say the same thing now. Like, we try and lend loans sort of 3 to 5 million upwards. Look, if someone comes to us, £1 million loan, we'll do it. If it ticks the boxes. But there's only so much time in the day, and only so much. And I want to be focusing on the biggest and the best clients that I can, so I don't want to be just scattergunning everywhere.
Okay. So then getting towards that stage, so Enness has gone from the boutique to then proper business, and then going into the next stage. So if I'm thinking back to your exit, obviously you've done a couple of companies. You did, was it 10 Capital or what have you? Just talk me through how that sort of came up, and did that sort of take you down a different path as actually?
I mean, look, 10 was, to a certain extent, a kind of regurgitation of Enness, but just on the lender side rather than broker. And obviously a lot of the faces on, were kind of similar, myself. And so I guess it was just always an evolution I wanted to make from that kind of broker side to the lender side. Being quite candid, I saw that there was more money to be made on the lending side. And also, I felt on the broking side that I was less and less able to determine or dictate the outcome of what came. That lenders were becoming quite rigid in what they would and wouldn't do. The job was becoming a lot more admin heavy, a lot more compliance heavy, a lot more regulation heavy. All the things, you're smiling because it's probably bane of your life at the moment. And so I kind of saw that kind of bridging space as like a really interesting space. And also I saw the international bridging specifically as a kind of space I wanted to be in. Obviously I'd moved down to Monaco, it's now 6 years ago now, and down in Monaco, south of France, those kind of areas, there isn't a broking model, there isn't a bridging model, so I kind of, again, I was like, my eyes lit up. I was like, well, huge opportunity here for bridging finance on the international stage. And I knew I had a really good understanding of kind of Paris, south of France, Monaco, Spain, Balearics, Portugal, St Bart's, all these kind of places, because all my clients have been buying there for years. So I kind of knew these places. Like, I knew the best bits in Mallorca to buy or not buy, or where you wanted to be in the south of France or in Monaco. Obviously I was living down there, so I understood the nuances of what they were doing. So I guess I just kind of put together a lot of that, what you'd call local knowledge, and applied it to something which kind of in the UK is, bridging lenders are ubiquitous, right? Like, they're everywhere. I mean, so the idea that I could be like one of the first bridging lenders in the international scene was hugely appealing. There's obviously competition, but competition is a strange kind of way. It's always good, right? Like, you kind of want to
keep you on your toes.
Compare to something, or look, what are they doing? What are they doing differently that I'm not doing that's maybe good, bad, and different? But you don't want to be like one of 1,000 people. You want to be one of like half a dozen people.
So obviously, to get to that stage, you have to leave the company that you've built from nothing, built up. Talk me through that process and how the head works. And
look, I think it's a strange transition. I don't know whether this is true or whether I'm telling myself this is true internally, but I think other people make a bigger thing of it than it is, like in terms of it's your baby and all this kind of stuff. And to a certain extent it is, but I think also, when it's time to move on, it's time to move on. And when I set up Phinom, I was wrong to say I was nervous, but I certainly wondered, right, I've kind of done reasonably well a couple of times before. Was that luck? Was that kind of, is it going to be a completely different journey that time? And it's really hard work. I think that's probably what you actually forget. You forget, like, I'm sure now, you sit in your throne at Prestige and all the minions run round. But I mean, I joke, but to a certain extent, you can go on holiday and the kind of things keep running to a certain extent, of course. But when it's the early days, it's you.
Yeah.
Like it's on you, if something needs to be done.
You out.
And so I think that's probably what I'd forgotten more than anything was actually just how hard it is in the early days and how hard you work. I kind of always joke, when people have asked me in the last sort of 18 or so months, how's it been? I say, like, I'm working like a dog. Like, you really are. And that's what you forget, that kind of, I hate the phrase, but, that hustle or that grind or whatever it is. Yeah, that kind of thing. That
it's quite lonely, isn't it? Especially in those early stages. Personally, I found that, before I got into how many steps I was doing a day, but in those early days, I probably do about 400, 500 steps a day, which is just going up and down the stairs correct. A few times. You forget about keeping your body active, and you have to sort of get back in the mold. And it's the people thing. So I think personally, that's one reason why I started growing my business rather than being a one-man band and didn't want to be sat on my own. So, but you've got a few other people with you now, and
it's going well. I think, as I alluded to before, that kind of in the early days, that kind of more people is ego. You see that as a success. Whereas now, we really are like, we want to be small number of high quality people, which we have, which is fantastic. Obviously, I've been fortunate enough to plug into family office down in Monaco, who are like some serious high quality, smart people who have made phenomenal amounts of money and have seriously switched on in what they do. So I've kind of been very fortunate. So I've been able to kind of bring like me and what is the kind of the team and plug into a bigger entity. I'm not saying big. I mean, like, but just everybody's a very high quality, and so I kind of have that backdrop, if you like, that sort of obviously in the early days it's on your shoulders, but you do have that support there if you need it.
Well, for Prestige, when we had our big relationship with Douglas and Gordon when I first set out, established that just gave me the ability to plug into a wider thing, and all of a sudden I felt like I was back in the Foxtons days again. But it was great for the modern world, mental health and all sorts, but it just gave you that extra bit, but also retaining control, which was fantastic. So where do you, without giving away too many secrets, where do you foresee where Phinom's going to go? What's the future holding?
So at the moment we're sort of just scaling what we're doing. So this year we have a target to lend 100 million sort of this calendar year, which would be a huge number for us, but it's doable. We've kind of just agreed certainly from a credit perspective, our largest deal, which is 30 million. Who knows whether these deals happen or don't happen, but certainly it's kind of a sign of the backing and the firepower we have and the ability to do it. Of the group, when I talk about the group, I talk about not only the lending part, which obviously I run, but the wider family office. I think I mentioned to you before, but there's very much a desire to have our own bank. And we're going through the application process for a banking license at the moment, not here in the Caribbean, which will sort of give a home to all the various elements of the financial components that the sort of family office looks after, and that'll be cool. That'll be interesting. I think that's it's quite an interesting thing to be part of, although sort of I'm slightly peripheral to the kind of nuts and bolts of it. I'm very much part from a day-to-day and a kind of conceptual point of view of what that will look like, how it will run. And I think if I'm talking 10 years down the line, which is probably I always think that's probably going more than maybe 6 or 12 months in a business plan is a little reckless. But I think if you go far enough in the future, you can probably at least say where you want to get to. So, if I'm sat here in 10 years' time, I'd like to say, the bank was a success, running well. Obviously a big part of that bank is lending money, a big asset management part. I mean, that's blue sky, and who knows, maybe it falls in its face tomorrow. But, certainly from a group perspective, that's where, they want to get to in the direction of travel.
Okay, well, you've got to have the targets to hit them in the first place, otherwise you don't know where you're going. Okay, so now you're safely on the other side of the fence from being a broker. So looking over at us guys, where do you foresee what we could do? Where do you think this industry, and especially in the UK, could do better? Where's the opportunities, and where does it need to improve?
So that's a really interesting question, actually. I think as I mentioned, when I sort of left that broking side, one of my frustrations was the inability to influence a decision that a lender made. So I think you did almost become, I'm talking about the high net worth space here, like you made a decision of where we'd go, like which lender or bank we would use. Obviously, like it's talked about valuations, which is it's a bit of an interesting topic in terms of, if you can dictate things. And so I think probably that the broker industry either needs to become far more heavily streamlined in terms of processing, because it's become quite a labor intensive job. So understanding maybe how you can create that old Alexander Hall funnel of doing 20 deals a month per broker. Like, how does that happen? Because at the moment, you're kind of almost halfway between half manual and half online. I think also there is maybe a few people have tried to do it, but it's that kind of sharing of knowledge. I think there's still a lot of brokers who are trying to stick sort of square pegs in round holes. And there's probably a lot of lenders out there that do a lot more stuff than we know about, whereas actually, as much as brokers like to think, we're still slightly reliant on, I say we, always sort of at heart a broker. You're reliant on what the BDM tells you. Generally, I mean, I know you've got Adrian and Maloney on next week or so. Great example of it. Like, we used the lender that Adrian was at because we got on. He was good at it. If there's a problem, he would sort it out. Which is great, and it's good that there's still an active role for BDMs and can influence it. But there's a lot of lenders out there, and like I think again, people use like a handful of people to get deals done. So I don't know. Like, it's a really good question. I simply don't know. I mean, what do you think?
Well, a lot of people are trying to make it too streamlined when it could actually do brokers out of a job, because it becomes too easy. Then it becomes very transactional. Adrian's a really good point. If I think back to him 20 years ago at the Portman, you could call him up and pitch him a deal, and they'll be outside their normal criteria, but you could, if you've got the right client, they could take a view in it. So those days aren't there so much. There are a few bits here and there. It's keeping the ability to remain relevant, obviously personal relationships, looking after people and making sure that people come to you. I think everybody's running a bit too much thinking AI is going to do it all for them. But again, they're going to do themselves out of it. If that works, well, why are you there? Why are you relevant? So it's getting the right balance between being transactional, taking away some of the admin heavy bits to actually go forward. But it's still there. I still think a good broker is very relevant. It's just some of them that are just there, not actually doing the job, which you described about the difference with a Enness broker. It's having that someone that understands it, gets it, deals with the customer. It's a people job at the end of the day, and it's remembering that's the core skills of a broker. It's still having that people element to it. The interesting bit is also calling people up. People don't use the phone so much anymore.
Don't, drives me mad.
I know, and if you see a number you don't recognise, generally a sales call now, isn't it? So the way people are transacting, communicating, I think it's a key thing, and that you just got to be on top of that, but still remain relevant. And there's business out there. You just don't do ourselves out of a job by thinking the computer's going to do it all. I think that's one of the key things. And then all the business skills that you spoke about, I think, more than anything. So what do you think London, looking from the outside, looking from Monaco, what do you feel about what's going on in London at the moment?
Or
the UK in general?
I love London. I'm always bullish on it, having run businesses through the credit crunch, Brexit vote, Brexit proper. Obviously I was here for part of COVID before I went down to Monaco. It's not in a great space. I think, if we're being completely honest about things, it's not the place to be at the moment. If you are an international business person or you're an entrepreneur, I was speaking to a client of mine who had moved from London to Dubai a couple of years ago. And he said, look, I've been in London for 15 years and it's about being in the right place at the right time. And he said, London was that right place. Doesn't mean it won't be again. It's just things are cyclical. So I need to move to Dubai. I need to be there, to be in that right place. So I think without getting too political, it's on a very slippery slope in terms of, I'm not sure financially how it sustains itself in the kind of medium term in terms of what's happening. There's been a huge amount of high net worth migration. There's nothing which will really reverse that I can see. is it a great place to live? Yes. Is it fantastic socially? Are the schools really good? It's all brilliant, but ultimately, you need to have a bit of a buzz. There used to be, like, in the same way back in the AH days, on a Friday in the city, it was real buzz there. You kind of, people wanted to be about. I guess Friday in the city now is just dead, is it?
I mean, it was Thursdays.
Yeah, but exactly. Like Fridays, no one's there. Yeah. So things like that. So I think for myself, like, UK, whilst I have no ties here anymore, no property here, no business here, plays a fairly central part of my life. And from a business perspective, it is there. I think it's probably going through, still in that trough before it's coming out, and I think we're going to see that play out. Certainly, Monaco's full. Like, I think at my daughter's school, which is the international school in Monaco, I think there was last term 385 applications for 50 places, and places full. There's a buzz there now. There's people doing business. It's very entrepreneurial.
Is that coming out of London, or is that just generally in?
Yes. I mean, there's a lot of flow of British people, in part. But I think now people are so transient. I mean, you can do your job from wherever. Okay, you run your business, so maybe you need some FaceTime. Or not maybe, you do need FaceTime with your staff. But actually, if you only lived in Portugal tomorrow, still run your business to a greater or lesser extent. And I think that's the thing, that actually, you need your laptop and you need your phone, and most people can probably do their business from wherever. So I remember people saying, if they don't want to pay their taxes, they can leave. Well, people will now, because they can move. They don't have to physically, like literally physically move money out of their bank in the UK and have it in check and deposit. Money's good. Money travels really quickly and really fast. And so I'm always bullish on London, and I love London, and I will continue to do a lot of business here, but I certainly have no want, need or desire to move back here in the short term.
Safely the other side of the fence, looking over, seeing that.
Yeah, correct. And I think it's also, it's its own worst enemy. I mean, it's PR is horrific. I mean, people talk in France, about, oh my God, it's so dangerous. I mean, you've been to Paris recently? Like, it's a bit hairy around parts of Paris, at the wrong time of night. But, the perception is that London is dangerous. And that's, for some reason, even the people from within the PR machine, which is Londoners, seem to, the greatest topic of conversation when I meet anyone here is, how it's going down the tubes. And even if it is or isn't, you don't.
So how does it correct itself, do you think?
Well, my personal view is it needs a fairly sort of large shift to the right in terms of government. I'm probably one of the few people that think that the Liz Truss budget was the right budget at the wrong time. So probably that budget was what was needed when Boris Johnson won his sort of fairly, I don't know what's called, a landslide.
Just went at it like a sledgehammer.
Oh, it's just completely the wrong time. I mean, it was just ill thought out. But certainly when Johnson won a majority in, was it 2019, I think, people were really pro-Britain. And I mean, he had run his campaign on his usual nonsense of kind of waving British flags around on zip wires. People were very into it, and this idea of a Singapore on Thames style budget, which is effectively what Liz Truss was trying to deliver, would have worked then. I mean, it was just all thought out. So I don't want to sort of talk about immigration, things like that, because I don't even know what the answer to that, because London is wonderful because it is so multicultural and so diverse, but clearly there's stuff which is really pissing a lot of people off in certain areas, which maybe I'm fortunate enough not to see. So whether people coming over on dinghies or whatever from the channel is causing a huge, I doubt it is. No. But these are very desperate people. But if people perceive that's a problem, then you need to address it. Because the economy isn't doing wonderfully at the moment. So people want to feel like they've got a few quid in their pocket, or they have the opportunity to have a few quid in their pocket to make it happen. So I think it's just a reason, and it will happen. You're starting to see it already. People they're not going to just sort of put up with it forever. And you start seeing a few of the European countries at the moment that people are pushing back on certain things, and that will sort of continue. So it's cyclical. Like this might be a long cycle out of the kind of the limelight, but London is London. Like the whole world wants to be here, live here.
Obviously we're running an international lender. Do a lot of other countries have similar problems, or does it just feel like, obviously because when you're here, it feels like it's just us? But
maybe. I mean, look. So my wife is Portuguese. We have a home in Portugal. We spend probably 2 or 3 months of the year in Portugal. It's done incredibly well off its non-habitual resident. The equivalent of a non-dom regime.
Yeah.
Italy now, which is obviously the other side of the border in Monaco, or just past France. Again, huge amount of high net worth migration into there. Same thing for non-dom regime.
Yeah.
So I think, look, everywhere has their problems, but I think what the UK has done spectacularly wrong is decide that, like, we want to get rid of the wealthiest. Let's just get rid of them. These are the people that are really causing us headaches.
Mm-hmm.
So, the fact that some billionaire who's chosen to actually live in the UK and bring his family over here, the fact he's not paying his correct percentage of a tax is actually, this is the intrinsic problem with the UK.
Yeah.
And I think that's probably where a lot of the other European countries are just scratching their head in disbelief. It's like these are the people we want. Everyone has enough issues with certain things, and lots of very wealthy people coming to live in our country and spend money is the reverse of that issue.
Yeah. And the irony was it was the Labour government that opened the doors
exactly,
in the 90s, wasn't it? So, okay, that's very interesting. So again, so Phinom's going well. So what countries are you sort of going around in, and where have you actually done lending so far?
Okay, so we've lent in the UK, Paris, south of France, Monaco. Haven't done anything in Spain, but we have done Balearics, Mallorca and Ibiza, Portugal, a couple of deals in Portugal, looking at the moment in something in Barbados. We have our first couple of deals in Italy, one in Lake Como, one in just not a million miles from Tuscany after. So pretty much Western Europe, kind of high net worth hotspots. I think it's the
I presume you get to go to all these locations.
So I do. I actually I have a site visit on everything that we lend on. So I was sort of joking, but I've had some fairly good outings. I mean, they are work. Like, you learn a lot. So one of the things we say is, look, I want to meet the client, always face to face, see the whites of their eyes, and I want to see the property, just because you just understand it a bit more. You get a bit more of an intrinsic understanding of what's going on. But we're lending on a car park in East London at the moment. So I'm going to my site visit on Wednesday when I'm here for London this week, is a car park in East London. And Joe, who works in the office in London, we were sort of joking, that I've had some fairly glamorous kind of trips, and her one with me is to the car park in East London. So it's not quite as fun.
So, and what's been built on there? What sort of?
Without going into too much detail, it's actually one of the old NCP sites. Who you may or may not have gone into administration.
Right.
So they're wonderful. I mean, not wonderful buildings, but they're wonderful sites. So there's a lot of intrinsic value in those. Yeah.
Fantastic. Great. So, well, I think I've asked you quite a lot today.
Yeah,
so it's been really great to have you on board, and
Thank you.
Been a fantastic guest. So thank you very much, Hugh. Really enjoyed today's chat, and on to the next one.
Thank you.